Hello everyone, welcome to our YouTube channel, The Candlestick Masterminds, for yet another informative video. Gold is the new talk of the town with price scaling all-time high on a daily basis. How much should you invest in gold for a solid long-term portfolio? With gold prices at an all-time high, investors tend to get swayed by past returns. Many also fear the FOMO effect, that is, fear of missing out, and pour their savings into an asset class that has already gone up. That would be a costly mistake. But there is still a way to invest in gold. Let's discuss about this. Gold prices are rising and are above the 70,000 mark per 10 grams of 24 carat as of 12th April 24. It's not the only asset that is going up. With the Sensex touching 75,000 mark and hovering just below it and Nifty touching 22,800, let's take a look at how the equity markets have performed in the last 12 years. Let's look at the Nifty 50 index as a broad representative. We can see that the Nifty 50 has given a negative return only once. Look at the annual return of Nifty 50 benchmark index from 2012 to 2023. But why we are discussing about the great equity returns here when we are actually seeking to talk on gold? To be fair, equity as an asset class has done phenomenally well in the last decade. Hence, people have gradually built up expectations accordingly. If we were to zoom out a bit and look at a longer time of history, it is evident that equity can be quite a volatile asset. For example, 2008 Lehman Brothers collapse and 2020 coronavirus. This will make it very uncomfortable for new investors who don't know much about market history. For this reason, to build a robust multi-asset diversified portfolio, there is a case to invest in gold. Let's look at the factors which tend to influence gold prices. Gold is different from other assets. It cannot be valued on the basis of cash flows or intrinsic value. Generally, gold prices are dependent on demand-supply equation and factors like geopolitical events, global economy, etc. that impact demand-supply equation. If you look at price history, you will notice that gold prices tend to stay dormant for extended period of time, and such no action periods are followed by a sudden and volatile spurt in prices which push up the average long-term return figures to historical averages. Historically, too, gold has proven to be a good hedge against inflation. In the 1970s, when there was a high worldwide inflation, gold served beautifully as an inflation hedge. As there is generally a low correlation between gold and other asset classes like equities, which help its case a portfolio diversifier. How much capital to allocate to gold? If you have a small portfolio or you have just started investing, you should focus on equity and debt. Irrespective of its importance, it's better to treat gold as a diversifier and a natural hedge in the portfolio and not as a core asset or core portfolio like equity or debt. Having said that, one can consider having a 15 to 20% allocation to precious metals like gold in the portfolio. In order to have any material impact on the overall returns or risk, it shouldn't have more than 15% allocation. There is a growing view among many large investors nowadays that precious metals will do very well in the commodity cycle that seems to be taking an upward trajectory. At present, gold investors are doing extremely well. But to be fair, it should not be treated as granted, and this video should be watched as a view on the role of gold as a portfolio diversifier and not as a return enhancer in case the commodity cycle pays out. How should you go about building gold allocation? If you don't have any material allocation to gold, don't go overboard and buy 15 to 20% in one go. Try to gradually scale up your allocation to gold, first to 5% in small tranches. Once that level is achieved, consider whether you require a further increase to 10% or more or not. A good investment advisor can help you understand how and when this should be done. No matter what the returns are, don't get influenced by short-term price moves. Always let your asset allocation strategy decide how much to invest in gold at any given point in time. The best way to invest in gold is sovereign gold bond. We will be doing a detailed video on SGB in a separate episode. Hope you got some nice information in this video. Do subscribe our channel and share this video with your loved ones. Thanks for watching.